Morning traders, it's the 6th of December. We're Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How are you, Steve?
Very well, thank you. How are you?
Yeah, not too bad, thanks. Watch Brazil blast
Yeah, I
through
did.
South Korea yesterday.
They strolled through Sambering their way to the quarterfinals. Who they face?
Yeah.
Croatia, don't they?
Yeah, they might do. I've
Yeah,
forgotten already.
yeah. I
Sounds
think they
about
face
right.
Croatia. Yeah.
Yeah, it was the winners
So
of yesterday's game, wasn't it?
yeah, they looked very good in the first half. So obviously slowed down a bit in the second half, but their job was done.
Indeed. Okay, let's get on to the latest headlines then, shall we? What's been moving markets over the past 24 hours? So first of all, we had the Eurozone confidence strengthen. We saw the economic confidence index posting a significant recovery to minus 21 for December from a previous reading of minus 30.9, and that was significantly above the consensus forecast of minus 27.6. We also saw stronger than expected US services sector data. The US ISM non-manufacturing index strengthened to 56.5 for November from a previous reading of 54.4 and above the consensus forecast of 53.3. The Fed will be taking note of all of this. The stronger than expected services sector data sparked expectations that the Federal Reserve would need to take a more aggressive policy stance in bringing inflation under control. We saw the dollar recover some ground yesterday as a result of the data that came out. After some initial selling pressure, the dollar recovered ground with expectations the Fed would have to maintain a hawkish stance. Wall Street losses also contributing to defensive US currency demand. Further hopes over China and their coronavirus policies. We've seen that they announced some further easing of the restrictions on Tuesday, and there are reports of further announcements within the next 24 hours, which would help underpin global risk sentiment. The UK retail sales declines in real time. The BRC data recorded an annual like-for-like increase in retail sales of 4.1% in the year to November, but this implied a further decline in real sales. And overnight, we saw the Reserve Bank of Australia increase interest rates by a further 25 basis points, taking the overall rate to 3.1%, which was in line with the consensus forecasts. There were no significant change in forward guidance, which was slightly more hawkish than expected, with indications that rates would be increased further. So that's it for the latest news. Let's get into some
Crypto.
charts. Yeah, crypto. Let's go with crypto.
Well, let's not get into crypto. Let's get out of crypto, as Steve always says. Let's look at the daily chart. Interesting. We spoke about this yesterday on the show, and we talked about this bullish, this hanging man candle, which is a bearish candle, especially at resistance. So the one day I decided not to. Oh, I'm looking at gold. What am I doing? Oh, that shows Joe wasn't paying attention either.
Was that the trick for me, was it?
Yeah. I was just like seeing if you were actually listening to me. Well, we talked about Bitcoin. It broke through resistance and was trading above the resistance area. But by the end of the day, it had given up all those gains and has posted a bit of a shooting star type candle. And that doesn't look very good at all. Breaking it down onto the shorter term time frames, we can sort of like see that on the 4-hour chart, we've broken up through this downward trending resistance line. This is like a bearish pennant. We can see the sort of like the pole here, the sort of like the downward trending resistance, the horizontal line, a bearish pennant forming, but it's quite a big one. So yeah, it'd be better if it was something more like that. That's quite a steep angle. So we'll allow this to rally up. But we had a good sort of like consistent 12, 16 hours of positive price action through resistance. And then we ended up with a doji candle from 8 o'clock yesterday morning when we were chatting on the show. And then 12 o'clock midday yesterday, UK time, the sellers came in. And so the rally up, which took 16, 20 hours, took 8 hours to take out. So back below the resistance, horizontal resistance channel we've got in there. So support coming in just below 16,700 all the way up to 16,800 and even 16,900. So, and below that we got the Ichimoku cloud, this like band of trend support that we've got coming in. So they're the levels to watch here. Really, we need to clear 17,500 before actually we wouldn't even get excited then, because 17,600 is quite a decent resistance from the swing low back all the way back in June. So that's Bitcoin covered off. Now, the exciting one that I was getting a bit carried away with just then was gold, because it's trading pretty well technically. Now, the dollar index had a little bit of a rally yesterday, and this has led to the gold sliding lower, which we did say we were a little bit concerned about. So we were up above the resistance. Again, we got up to 1810. So the resistance band now between 1800 and 1810. We've also got, well, I haven't got the 200-day moving average. Let's show you that on there, not that one. Where's all my moving averages gone? There they are. There's the 200-day moving average. We're well back below it now. And the hanging man candle yesterday that we mentioned was quite ominous, and it's played out a really nice evening doji star formation. So real nice reversal pattern there. We are at the pivotal level of support, resistance, which goes all the way back to 2020. This is a level that's just been key. So we're hovering around it now. I imagine we get a breakdown below this 1765 level, then it opens up another retest of the 1730 to 35 support. So really watching that closely this morning. And again, with the last 2 days of price action, I'd be looking to sell into rallies currently. We do have this double bottom formation playing out. That has a measure move target up to 1844, but this is a pretty big setback. Silver, bearish outside candle in silver yesterday after the hanging man candle. Again, similar sort of price action to gold, all based around the dollar drive higher. And we're on the front foot this morning, but only just. The level to watch this morning, 22.18 and 22.04. So support above $22. A break below there should open up a move back to 21.65. And again, as we say, as long as we can maintain levels above that 22.50 area, then the head and shoulders, the inverse head and shoulders formation has a measure move target up to nearly $25. That would be still on, but it's got a lot of work to do at the moment. Copper, again, bearish engulfing candle yesterday, stalled below the 200-day moving average. Again, on the front foot slightly this morning. Support coming in at 373 and resistance at 390, 391 and 396. So again, need that push above there to put in place this. We could call this a bit of a double bottom. Let's make it a little bit clearer on this chart, on the daily chart. We'll call that the double bottom. It's not exactly the same levels. And there's the next neckline there. That is actually going to be a blue support line at the moment. So we can take out, we can see that if we go back, we've got this like spike lower back here. I'll get rid of that because it does make the chart a bit messy. The 38.2% fib retracement is at 386. That seems to be helping at the moment, but the 396 is more of a resistance level. So yeah, copper again on the back foot overall from yesterday's price action, but trying desperately to get back higher this morning. Crude oil, that had a reversal also. The last couple of days of price action have been pretty negative, taking out the almost the previous 3 days, and we're back heading towards the support level around about $76. Not a lot has gone on this morning. We've got all inventories out tomorrow, obviously, but resistance firmly at 83.23 there, and the main support coming in at 73.76. Brent crude oil, similar price action. That's really nearly down to that key support level at 82.35, and below that we've got the $81 spike low, or it's just below $81, 80.76. Resistance coming in the form of multiple moving averages and the Ichimoku cloud just above, all the way up, a band of resistance between 90.27 and $93. This was my gun to head trade yesterday. Natural gas, I was looking for a little bit of a contrarian trade. We gapped open yesterday morning, I went for the buy trade to fill the gap. It didn't fill the gap, so it's a bit of a breakaway gap. So that's quite key, and it's continuing into this morning. We've broken up through the upward trending support line from the swing low around about January at the start of the year, taking out this point here and this point here, and broken through it really nicely. Now the main support line goes all the way back to June 2020, where we've got 1, 2, 3, 4, 5, 6 touch points. Support coming in today at 475. Now that would be a big old move for natural gas. So we're not expecting that maybe today, but it's if we do get a break of this horizontal support, which has provided really solid, actually we'll take it from this level back here, really solid support. It was a previous resistance, broke up through it, retested it, carried on up, and it's multiple touch points, 1, 2, 3, 4, 5 days. This has been the low level, 533. Put that number in your natural gas brain today if you're trading. That's quite
good. That's at its lowest level since before the war, right?
Yeah.
And we're still paying high prices for it.
Yes.
And the retail side of things.
Yeah. So I mean, potentially this, like, you look at this. This could be two sort of like formations. You could say it's
well, the head and shoulders
head and
goes
shoulders.
negative, doesn't it?
Yeah, probably. The head and shoulders here, quite key. Maybe we should look at the weekly chart. I mean, that's pretty ominous. Now, so this 533 level this morning could be a good gun to head trade idea, fading it. So like buying it here, having the stop below, give it a little bit of room, but it's been a pretty strong level in July and October. There seemed to be someone just sitting there. I'm bid, sell me as many as you can. But will they be there again? So 533 for me. Yeah, it might be I look a bit silly, was sort of like trying to buy the sort of like gap fill yesterday, but we could get a little bit of a reaction rally.
You can still go for the gap fill as a target if you're going to buy that.
Yeah. Yeah, because your stop will be really, really tight. You wouldn't want to be holding it below there. So, I mean, one thing to look at as well is probably the weekly chart on natural gas. Because if you think about it overall, we have been higher all the way up here. But this is the ominous looking formation. Yeah, I mean, the measure move target of that would be pretty close to 0. So let's see what it is. If we take it from that line, yeah, 82 cents. I don't mind waiting for there.
Good target.
Yeah, that'll be the summer though, won't
it? Yeah.
We won't want it then. But yeah, so that's the natural gas is the one for me to watch. It's quite an exciting market at the moment, especially with the backdrop of what's going on the political stage.
Yeah, nice one, Steve. Okay, is that
yeah, that's pretty much covered it. Yeah.
Boom. Okay, let's take a look at FX then. So dollar index, as Steve mentioned, had a decent day yesterday. Obviously mentioned it in the headlines as well. Still got this head and shoulders top pattern on the daily chart, which for me continues to loom over the price and suggests that a top pattern has been put in place and we should be expecting to see lower prices. Yes, we may get rallies along the way. We may see bouts of worrying action in the markets and see people dive back into the dollar index as a safe haven trade. But if we look at yesterday's price action, we can see that the candle that was posted was a pretty strong one, but in fact it's just rallied into the neckline of this head and shoulders pattern that we've now completed. And if we look at what we're doing today, we have seen higher prices, but we are starting to fade a bit. We're down by 0.12% as things stand. So this could be a pretty good area to sell it, looking for lower prices in line with that head and shoulders pattern. So I'm still not convinced that we've seen the low yet on the US dollar, and therefore we should be looking for lower prices. Ultimately, the measured move target of the head and shoulders top comes in at 95.96. So I'm looking for some pretty significant prices on the downside with this for over the medium term. Let's take a look at euro US dollar. We can see that reversed yesterday. posting a pretty nasty looking candle really, coming up just shy of the 38.2% fib level and the measured move target of this bottom pattern, which is at 106.52. We are on the front foot today, really just mirroring the flip side of what we've just seen on the dollar index. That was down by 0.13. We're up by 0.14 on euro dollar as it stands. Any pullbacks really towards this kind of zone around 103.62 for me would be a decent area to buy, looking for higher prices to at least tag that 38.2. And if we can break above those levels, then we can start looking for these swing highs that we posted back in May, and then target that 50% fib level at 109.42. Looking at cable, that stalled at the 50% fib level again yesterday. We can see that there's seen a couple of touch points of this level. Well, it wasn't relevant there, but it is here. We've seen a couple of attempts at trying to overcome this. Yesterday we posted a bearish looking candle reversing from the highs that we'd seen in the previous sessions, bang on that 122.98. So again, pullbacks maybe towards kind of 120.87 to 120.35. Anything into that region, I think, will represent an opportunity to buy a dip. I do believe we're going to get a breakout above this 50% level, and prices will continue moving higher in the short to medium term. Let's take a look at Aussie US dollar. That took a bit of a bashing yesterday. It looked as though it's potentially breaking out of some sort of pennant formation following the completion of this inverse head and shoulders. But then we saw a massive reversal yesterday, obviously impacted by the interest rate decision that we saw from the Reserve Bank of Australia, hiking rates by 0.25%. Big reversal there, back within this consolidation slash continuation pattern. Seems to be finding some support around 66.81. But that was a pretty nasty candle. So let's see if it can regain its composure and maybe look to have another attempt at breaking higher. If it breaks below 66.81 outside of this pennant pattern to the downside, then I'd be looking for a retest of the neckline of the head and shoulders, which is all the way down at 65.19. Let's take a look at New Zealand dollar US dollar. As we know, that was trading in a pretty impressive bullish channel. And we saw a reaction from the upper end of that channel yesterday, posting a bearish outside day. So we posted new highs on the session, but then closed close to the lows of the day to trade within this channel, and looks as though we may see some sort of pullback in the short term. Ultimately, I think it could remain within this channel. We've obviously had a decent breakout of the medium-term downtrend, and therefore I still think it's a case of maybe buying dips on this one for the time being. But of course, all of this is going to be dependent on what the US dollar does. If we see it continue to break down from that head and shoulders top pattern that we've highlighted, then we can expect to see higher prices on this over the short to medium term. Dollar CAD. So getting some real mixed signals on this one. We obviously posted this head and shoulders top. We saw the breakdown, we saw the retest of the neckline, then we saw this big push to the upside last week, followed by an aggressive reversal the following session. But yesterday we saw a decent push to the upside. This was really sensitive to the dollar improvements that we saw, and it's trying again to push higher. Really, very close to invalidating this sort of head and shoulders top pattern that we've been talking about now for some time. I'd probably give it up to this kind of level here, which is at 136.92. If it starts to break through there, then the chances of it invalidating the whole pattern are probably quite high. So I'm not really sure what to say about that one for the time being. Probably best to leave it alone, I would say. Looking at dollar Swiss, so that looked as though it's breaking down through this uptrend support line yesterday, but the buyers stepped back in and still defending this 93.70 level that we can see from back in August. Only one very minor close below that level, but other than that, it's been a pretty good opportunity to buy and seems to be sending prices higher. But if you look at it in the short term, we can see there is a sequence here of lower highs and lower lows. So that is certainly a slight concern. Maybe forming some sort of wedge here. If we do get a breakout to the upside of that, then maybe we can start thinking about higher prices on dollar Swiss. But again, it's all dependent on what the US dollar does. Looking at dollar yen, decent reversal on that yesterday, following the close below support at 135.58. For me, that would have probably triggered further losses towards this level here, which is at 131.40. But we've seen a decent pullback in the last couple of sessions. So maybe this newly formed resistance at 137.65 will cap the gains and may lead to further selling before eventually reaching our target down here at around 131.50. So that's it for the majors, unless there's anything else people are looking at. I can't see any further comments. So I'll leave it there and we'll move on to some indices.
Lovely. Yeah, so I'm going to look at initially Dow, and weekly chart is forming a bit of an ominous picture. We've seen it before. The candle last week was a bit of a doji candle, and we're now sort of on the back foot this week. So we could be forming an evening doji star formation, very much similar to what we formed in August, and then we had the big sell-off and posted a lower low. So although we've posted a higher high compared to here, that doesn't look great to me. I'll dive a bit more into it. That's just a weekly chart. Let me just take a look at the daily. Oh, this looks a bit messy. Right, we've got the resistance level, which was from that swing high that we just highlighted. Yeah, the last three candles on the daily have been like hanging man, doji, and a nice sort of follow through bearish move to the downside. Support really coming in, I would say around about 33,550, and there's the trend line, the downward trending resistance line. That would provide some support as well. That's all the way down at 32,900. So Dow very much on the back foot. Similar to Nasdaq, but Nasdaq hasn't quite achieved the heady heights of the Dow and has stalled at the 100-day moving average and moved lower, reversed lower. Again, 3 days of negative price action, Thursday, Friday, and Monday, all show it being like quite gloomy, really, after such an immense rally last Wednesday from the Fed meeting. We're still in the Ichimoku cloud, bearish Ichimoku cloud, so still trending lower on a daily chart as far as this is concerned, and hasn't quite got up to the downward trending resistance line, which the Dow has broken through. The S&Ps was the biggest giveaway for me last week when it stalled at that downward trending resistance line. Spiked through it slightly on the day, but negative after that, and looks quite now set. It will take a lot to get this back above the 200-day moving average. That comes in at 4,035, and the trend line, and obviously that high, that spike high that we got last week, all the way up at 41,000. So yeah, very much trading around that psychological level, 4,000 level. If we do get a push below there, I imagine the 100-day moving average may come into play down at 39.34. On the DAX, again, a little bit of a toppy formation, potential for a double top if we get a break of the neckline. The neckline coming in with this candle here, 14,317. So we've got, let's just highlight it so we're clear. We had the high here and here, and that will be a nice double top formation at the highs. Support after a break of there, 14,126, before this potential vacuum move down. That is pretty much on the cards if we do break that support level. FTSE has benefited from that dollar strength also, but looks to be stalling in front of the major resistance. It's got above the August highs, just like the Dow did, but is stalling a little bit now. So on the back foot, and support coming in around about 7,500. Break of there opens up the downside a little bit, but this is going to be a bit more of a sluggish drive lower if we do get it, and really needs to clear the resistance, which starts at 76.22 and goes all the way up to 7,700. So yeah, that's pretty much covered those. I don't know whether I want to just take a quick look. China, obviously the Far East, the real sort of bright spark. There's like that opening up. We've seen this before, and we talked about it over when we were pretty much locked down. The markets seem to rally on the chances of the world opening up again, or economies opening up again. But when they do open up, you tend to get the sell-off then, which doesn't make sense at all, but that's how the markets seem to react to it. They seem to sort of it's like buy the rumor, sell the fact, a little bit of that. So I think that's going on with China and Hang Seng as well, both inverse head and shoulders formations, as you can see. So technically looks like good potential to the upside, but if they do open up and there's I think this rally again is a bit of a dead cat bounce. It'll be sold into eventually.
Thanks, Bear Steve.
Yeah.
Looks very positive to me.
Yeah, I bet it does. I bet it does. You turn that chart upside down, it won't look so positive, mate.
Perfect. Okay, thanks very much, Steve. Let's go to the gun to the head challenge then. So this is where Steve and I pick trade ideas as if we had a gun to our head. What would we trade right now? What would be our preferred pick to get involved right now if we had to do something? We come up with a trade idea with a stop and a target. They're all placed at market, and we publish them to our TradingView profile. So if anybody wants to check them out, it's very simple to do so. You just go to signal_center and you'll be able to check out any previous ideas that we have come up with and check out their progress between now and 9 o'clock UK time when we close these trades out. So we don't give them too long to operate within. We just hope that within that period we can turn a bit of a profit, and every trade idea that we come up with must have a risk reward ratio better than 2 to 1. Steve maybe gave us a little bit of an inkling into what he was looking at. He highlighted the natural gas chart. Is that what you're going to go with again, Steve? You went with it yesterday.
Going
You're
with
going to
it
have
again,
another
mate.
stab
Yeah.
today.
Gonna have another stab today. I feel a bit more confident because I've got this last line of defense here. Really, I said it was 533. This like spike low did get down to a low of 530, 529 and a half. What was the low over here? 532. Yeah. So yeah, I'm going to go because this head and shoulders formation isn't a head and shoulders formation until it breaks the neckline, or isn't confirmed until it breaks the neckline. So while it hasn't broken the neckline, let's take it. Let's ignore it. Let's ignore the fact. So I'm trying to get a decent risk reward trade idea, but the market's moved a little bit since I just drew this up a short while ago. Momentum seems to be stalling ever so slightly as we move down to these lows. Trading now at 547, say. So 547. Oh. 527 will be my stop. So a nice 20 tick stop. And we'll get a nice 607. That'll give us 3 to 1. But what about the gap fill? What about 617? Does that improve things? Yeah, 3.5 to 1. Why don't I go for that? So we're going to get in now, buying at 547, stop at 527, and the target is 617 to fill that gap. And if you look, there's a little alert there that I presume is where our intraday trade idea, our analysts are looking to sell into that gap. So still bearish overall with this trend.
Okay, good luck, Steve. I didn't mean to avoid mentioning yesterday's results because we're a transparent bunch and we don't want to hide anything. So yesterday we did have 2 trade ideas. Steve was buying natural gas yesterday, looking for a gap fill, but it didn't play out yesterday. It was a very, very aggressive stop that Steve went for, but it's moved back down towards that major support. So he's having another go today. So that was a -1R yesterday. I was looking at selling sterling yen, trading within this channel. Someone pointed out it was the 4th touch at the top end of the channel, which can be risky, and they were absolutely right. That was stopped out as well. Prices have continued to grind higher on that. In terms of how we're doing overall, we've been doing this for a long time now. Steve and I have nearly done 700 trades each on this little challenge that we do. And just to manage expectations, our win rates are around about 40 to 41% on these. So our default expectation is that we're going to lose. But we do always have these very punchy risk rewards on these ideas. So when they come in, they tend to be, pretty significant winners. And if you look at our account, hypothetical account that we've been running since we started this, by risking 1% of capital per trade and getting both our trades on at the same time, we're up nearly 200% in that time period. Yes, having a little bit of a pullback at the minute, but of late, it's been a pretty good run for us. So just make everybody that's watching aware of that. So my trade idea today, I'm actually revisiting a market I looked at the other day, which was Aussie Swiss, because it looked to be forming a head and shoulders top within a range. I got that trade on the other day, and it looks to be falling. Well, it's fallen pretty nicely, basically towards the target that I had. But what we can see now is a retest that's happened in the last couple of hours. To retest the neckline of this head and shoulders top. So we're going to have another go at that. Looking at the candle over the last hour, it's rallied into resistance and it's closing below the 10 period moving average as things stand. Still got half an hour to go on that, bear in mind, but it looks as though it's reversing So I'm going to sell it now at 63.34. The measured move of this head and shoulders top comes in at 62.60, so that's going to be my target, with a stop at 63.55, giving me a risk reward ratio of 4.23 on that one today. That's good to go, ready to be published. I'll get it put up there now. Anybody wants to check these out throughout the trading session, feel free to do so.
Nice one, Joe.
Okay, day ahead. We have a pretty light calendar today, to be honest. We've got Australian GDP, but that's not out until midnight in UK time tomorrow. So not really much going on throughout the day today. And for the rest of the week, well, tomorrow we've got the Bank of Canada policy decision. So another central bank coming up and going to tell us what they're going to do with regards to interest rates. Not sure what the expectations are at the moment, but we'll cover that on tomorrow's show. No doubt. So that's it from us, Steve.
Yeah, lovely. Yeah, enjoy yourselves out there. Be safe trading, and look forward to seeing you tomorrow.
Indeed. Have a good one, everybody. Goodbye.